Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here, Jim. Thanks for having me.
Mark, do we have a special offer for our listeners?
Yeah, let's do it for our House Street listeners. You can go to my website, VRTrader.com. That's Victor Robert, VRTrader.com. And we offer 50% off to all the House Street listeners. There's a promo code needed. And when you go to the order form, the promo code is 2022, half off, 2022, HALFOFF, just as it sounds. And you get half off for any time frame you specify. And since we're talking about my newsletter and what I do, I also like to disclose that I'm not a financial advisor, nor do I provide financial advice. Thank you.
Mark, how would you describe what's happening on the stock markets right now?
Well, there's a lot of mixed feelings about the market right now. We get a little bottom last week, really tied to some cycles that we've been talking about, the October low, so to speak, but there was also a lunar cycle that came in. We had published that within a day or two. The market bottomed, and we're just in the time frame for that, the so-called end of the year seasonal rally. Yale Hirsch was famous for this with regard to the January barometer, which we put in our newsletter, where the first few days of January, in the month of January, often foretell the closing up or down for the year, and this year it said should be up. So we're not that far away from highs. I mean, if they want to take off, I suppose they could, and you could say, oh, he was right in that analysis that January barometer sort of leads the year, and this is the time of year where we can get, the Thanksgiving turkey shoot, which you can call around Thanksgiving, where it rallies, and the Santa Claus rally and all that kind of stuff. So the market takes off last week, and bonds start to rally, which surprised the bond bears because the bonds been down and down, down 60% in the last, year or so. And that encouraged everyone that perhaps the Federal Reserve, which seems to be the only thing the Fed watchers and the Wall Street watchers want to talk about, is that, maybe they're going to lower rates, and the market knows more than the Fed, and some say it actually leads the Fed, and the Fed follows the market. So the uptick in the bond market brought interest rates down a little bit, a little downtick. Mortgages dropped a little bit, and this all together, looked like, oh, this is the trigger. We're going to take off now. We're going to get our big year-end rally, and that's it. So it looked good for a couple of days. We had like 7-8 days up, and then Jay Powell had a conference call today, Thursday, and he sort of put a kibosh on the interest rate decline scenario. He pretty much said, well, we can still raise rates, and the market sold off a couple hundred points, and it's just a lot of nonsense back and forth here, and we're not even talking about the war. We're not talking about, supply-demand issues around the world and shortages and what Russia may be doing, or what Saudis are doing with oil, or, of course, the big Israeli-Hamas war, and what's China going to do with Taiwan, and what are they partnering with Iran, and I mean all this other geopolitical significant stuff. But no, that's not important. We just want to worry whether Jay Powell is going to tell us rates are going down or the bond market is rallying. And of course, there's the argument that war is often good for stocks, and don't worry about it. The only problem is if it's really a serious war, and you have things perhaps happening outside of the war zones and starts coming here into North America, and we've got demonstrations going on now, as you all know, with regard to the Hamas-Israeli war, and that really hits home for a lot of people, particularly of the Jewish faith. There's a lot of other stuff out there besides where the bonds are rallying a little bit and the stock market's going to take off. So we have to weigh everything here, and there's political pressure with the presidential election next year. We know the markets are manipulated. We know we have the Equity Stabilization Fund, the Gold Act of 1934, the plunge protection team that Ronald Reagan signed into law in 1988, a lot of surreptitious activity even on the part of the Fed itself, which I've talked about ad nauseum on this broadcast, about stuff they do that were not even discussed, like getting involved in buying S&P or Dow futures or individual stocks, and there's very little discussion about the money supply, the tightening of credit, which the Fed could do, which could really send the country into recession or worse. The balance sheet is really relatively unchanged compared to where it was a year ago, which is what really needs to happen. I mean, if they want to follow the pattern of Paul Volcker back in 1979-80, he tightened credit and raised rates, and that's what drove rates up to 15-20%, and we really had a serious correction back then. So is Powell going to do that or not, or is he being led on Pinocchio strings, marionette strings by the politics? And there is some research that says the Fed doesn't like to do a lot during election years. So, maybe they'll try to goose the market up and make it look a lot better than it is. And there's all discussion whether there's a recession or not. Of course, there's already a recession, but they don't want to admit that. Just so much. I mean, you asked me this question about the market. There's so much going in. It's a trading environment. It really is. If you're long term and you own the S&P, and you stay with it for, decades, you're going to make money and you're going to have to suffer through the corrections. And for young people, that's what you should be doing. Just buy an exchange-traded fund, an ETF for the major indexes, and just sit and add when you can add. And dollar cost average means you put a fixed amount of money in every month, no matter if the market's up or down. And over time, markets, tend to go up. And if you're real aggressive, you get into the crypto market, which is doing fabulous right now, which is more speculative. But the weight of the evidence sort of says, with political pressures and the war out there, the powers that be, need to keep the market up and rallying it. They can't really permit a crash scenario because of the election and because of general public sentiment and what's going on with the war. They don't need a war and a stock market crash at the same time. So I'm not a bull, but I say that for a lot of reasons. We talked about this as well. I mean, you look at the percentages of the stocks in the S&P 500 or in the Russell 3000. I mean, more than half are down. Only about a quarter are up for the past year. And we talk about the 7 big stocks. They call it the Magnificent Seven. Everything from Facebook to Tesla to Netflix, to Google and Microsoft and so forth. So, NVIDIA, of course, is the big one because of the interest in AI. So, those are starting to uptick here a little bit. So if you want to, play the game that's been played up to this point, I guess you own the Magnificent Seven stocks, the top 7 big names. You can do that by, I suppose, buying, those 7, or you can buy the NASDAQ 100 index, which is heavily weighted with those names. And you hold your breath and say they'll probably rally the market, on a net basis for a lot of reasons. despite recession or no recession, despite rates going up or not going up or down, and that's it. So again, I take it more of a day-by-day situation and just look for opportunities, and there are plenty out there now. So I would say net, all the numbers say you should be bearish, and that's sort of my gut, but the reality says they're going to probably push it higher just for all the reasons that I cited.
Why are cryptos doing well?
In fact, there's really some interesting news today. It came out, the biggest money management firm in the world is called BlackRock. You can buy their stock, too. And we've talked about they did a filing with the Securities and Exchange Commission to get Bitcoin, a Bitcoin ETF under their purview. And apparently it's coming because Bitcoin is rallying like crazy. It got to $37,000, over $37,000 today. It was only within the last 6-8 months, it was $15,000. And everybody thought it was going to go to zero when it was $15,000. So they filed for that, and that's a big positive. You got to own Bitcoin. I mean, BlackRock is in there. They're the biggest money management firm in the world. And this is not investment advice. This is just common sense. I'm just telling you, they're going to drive it higher. So we found out in one of their filings today that they also are going to try to create an ETF for Ethereum, ETHE, which is the symbol of an ETF that already exists for that, but they want to create another one. And that's, so the second biggest crypto out there. And another one that's been moving up is XRP, which is Ripple's creation. And they had a big dispute with the SEC, which apparently they're winning. So, yeah, a lot of action in the crypto market. We put out the blockchain letter. I urge all of you to take a look at that. I'd love to have you take a look at that because that is a strong area now, and I think you're going to see more appreciation. And the fact that BlackRock gets involved gives it a lot of legitimacy. And it also says something about what Larry Fink, who runs BlackRock, feels about the future of the financial world. I mean, do you need Bitcoin to offset your risks in the S&P and gold and real estate and the Magnificent Seven and oil and everything else that could be out there just because it is a hedge and it's a point of diversification? So that's a big story. And, made a new high today, that particular name, which is on our list of stocks that we monitor, or vehicles that we monitor, and we have our blockchain letter that we talk about that. In fact, we'll be putting it out tomorrow on Friday evening. So, yes, what can I say? This is an exciting area. There's a lot of, as always, as they say, Jim, as Jim Cramer always says, they have to give him the credit for it, but I think it is his line. If there's a bull market somewhere, we try to find it. And certainly there's one now, at least one underway again in the crypto market.
Do you think people are also looking at cryptos because they fear the government will suddenly make digital currency mandatory and there goes cash?
Yes, that's a big part of it. I mean, there's a war on cash. The government has a war on cash. And the theory is they're going to outlaw it at some point where you can't have cash anymore and it all has to be digital. So if you have cash, it'll be in a black market, which will continue to exist. Even if they outlaw cash, it's still going to exist. It's like they try to outlaw gold back in 1933, and gold for some reason continued to exist. They attempted full confiscation, which never really happened. And the rest of the world, may not adhere to the guidelines set, by a few bankers. But yeah, the reason crypto was created, Bitcoin, set the tone with it back in 2007 or 8 when it first got started, or 2010, I forgot. It's a way to put your money out of, government hands, out of control. Now, of course, if you own a Bitcoin ETF like BlackRock and Larry Fink are putting together, it's a visible thing you're investing in. You're investing in the price appreciation of the Bitcoin, but you're not using it for investment or commercial, or trading purposes. You're just investing in it for you want it to go up, like you invest in gold. You want it to go up, but are you using your gold to actually barter and do exchanges and buy groceries and conduct business? No. So, it depends how you're using it. Gold and silver should be used for currency the way it was, thousands of years ago, and still probably is done indirectly now among banks themselves to settle debts and so forth. But if you really want to keep your money out of the system, and you got to own Bitcoin and know how to use it and have a wallet that protects it, because there's security reasons around having a Bitcoin. If it's not protected and you have the right, access to it and protected access, you could lose it. Some people, this has happened. So, there's different reasons for being in it and also purposes. So, a point may come where you may have to conduct your life using cryptocurrencies, so you don't want the government to know what you're doing. Because the government's going to have its own crypto too. And then you got to decide, we're just going to play along and we're just going to buy some Bitcoin stock or ETF and just play the market on it. And we don't care whether the government takes over our bank accounts and it's all digitized currency and not real currency anymore. So there's so many ifs of what's going to happen and how everyone's going to react to it or not react to it. And that's a lot to talk about here. It's really an interesting area, but in terms of just trying to make some money with it, there's growing demand and interest in it. And as I mentioned on a previous broadcast, I think Bitcoin, which is now 37,000, could easily see the 80,000 level, I think, in the next couple of years. So that's a double or more. And it's volatile. I mean, it could be 37,000 today and drop to 27,000 in 6 months and then be 45,000 6 months after that. I mean, it's a very volatile thing. But I think with BlackRock involved, that should provide more stability once that ETF really starts trading. So keep an eye on it.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Any action in gold?
Gold's been frustrating because, you've got the dollar, looked like it was coming down a little bit, and gold popped up, and then dollar started to bounce a little bit, and gold doesn't like when the dollar goes up. And, it's, and there's the argument, well, it's going to do it despite what the dollar is doing, because there are times where these markets do track together. They don't necessarily track inversely. There's a whole article I put in my newsletter. It was a presentation on the part of Bill Murphy at a recent convention. He's the founder of GATA, the Gold Action Trust Committee, and GATA.org, and, about the manipulation, his 30 years of experience and research and evidence regarding government intervention and manipulation of the gold market, and what he calls the suppression of the gold prices, which makes a lot of sense because as gold goes up, it makes the government look less credible. So you got to read that. It's in my newsletter, because that's part and parcel reason that gold hasn't done as well. I mean, gold should be $10,000 or more an ounce, regardless, but it's been suppressed, and he shows the evidence of bank swaps and intervention into the futures markets and all kinds of shenanigans out there, which is a problem for gold. And, you got the government sticking its nose in and suppressing the prices, and you got central bankers all over the world swapping and leasing and lending gold to one another. And, it's a mess. It's not like, a free trading, commodity. I guess you got to look. I don't know what commodity you can say is 100% free trading. Is it soybeans and corn or something like that? Because they know the exact amount of crops that are being produced, and you can't hedge that so much. Though you could argue that the government agricultural reports aren't totally accurate either. But you just have a uneven, unlevel playing field here. So. Time says over time it does appreciate, because there's only a certain amount of gold around, and at some point how much pressure could there be to suppress the price? And I know I made a comment months ago about mining asteroids and getting gold and precious metals and other important minerals from the asteroids or from Mars and other places. And I'm sure this is part of the plan. And at some point, when we start mining, if we're not doing it already, I suspect it may already be happening because we sent a ship toward an asteroid to try to break it up. So we have some sophisticated technology out there. We don't hear about all of it. But assuming I'm wrong and it hasn't happened yet, over time, we start mining Mars and these asteroids, which statistics show have unlimited amounts of rare earths and metals and gold and silver. I mean, at some point, that's going to suppress the price of these metals. Once that happens, and whether that's in 10 years or 50 years, it is a factor, unless you argue, well, whatever's produced is going to be used because we're going to be growing and expanding the planet, and then everything is relative. But over time, at the moment, if there's shortages, prices should appreciate. And just on a political basis, you've got Russia accumulating gold and China accumulating gold, and the BRICS nations trying to discredit the dollar and maybe even create another currency backed by gold. So these are all forces that could increase the value or support the value of gold. So the bottom line is, this is almost like your question about crypto. It's something you should own as part of a diversification. You don't want to have all your money in the stock market by any stretch. You don't want to have all your money in bonds. Bonds are down 60%, so if you're a bond holder, you've lost a lot of money. But if you own treasury bills, which expire every 3 to 6 months, or actually 1 month to 3 months, you're pretty liquid and your prices don't really change that much, so you get a fixed interest rate. So, some certain things you can do as diversification, and gold is certainly part of that. I mean, I remember buying gold at $200-300 an ounce around 1999, 2000, and here we are 22 years later, and it's almost 10 times what I paid for some of the coins back then. So in 20 years from now, maybe, gold will be 10 times what it is now. Maybe it'll be $20,000 an ounce in 22 years, and slowly appreciate just by the demand and inflation and other things that are occurring, or political insecurity and the need to own something tangible. So I'm a bull, but right now it's sloppy, and we need to break out above that 2070 high. It's a triple top, and we tried to move over 2,000 here in the last few weeks. We couldn't do it again. We failed. And let's see what happens. Powers that be are really in control here, Jim. I know I like to think it's a free market, but it's not totally a free market. So we'll see how it plans. But you should own some, like you should own some crypto, like you should own some treasury bills. And if you're a long-termer, you own the S&P for a part of your portfolio, because it seems to overall net go up, even though we get these huge crashes along the way. But on a very short-term basis, gold's running into a little resistance here, and I want to see it prove itself.
Mark, thank you so much for chatting with us.
Oh, thank you so much for having me. Appreciate it.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. If you have any questions for Mark or for any of our guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.